Consumer confidence levels ticking down slightly in June as Americans continue to show some unease about the state of the economy. This according to the Consumer Board's monthly numbers. Joining us now is Ian Wyatt, Huntington Commercial Bank Director of Economics and Commercial Market Strategist. Thanks for being here.
Thank you for having me.
So I'm curious, we're all trying to get a handle on the consumer now, and it does seem like there are cracks, particularly at the lower end. But what are you seeing?
Yeah, I think that's very much correct. I think at the higher end, when I talk to, say, boat dealers, for example, even, or RV dealers, so we have a big lending business in that space, they're saying, the top end products, they're still able to sell. The really high ticket stuff where it's some retiree with a big equity account and says, how much
Time to
money?
get a boat.
Yeah, I mean, you spend it or at some point or you're going to die with a lot of money, so might as well spend it. I think it's more in the value-oriented products where they're seeing, and when you're financing with debt, where you're seeing a little more hesitation, especially given current interest rates.
And Ian, how do you see the consumer sort of holding up, beyond just today, more, near intermediate term? What are you looking for?
Yeah, I think one funny thing is we definitely have this, again, that debt aspect where I think if it's a product where you're borrowing to spend on it, you're going to have a different experience than talking about experiences right now. If you look at, say, Taylor Swift is not just Taylor Swift, it's sporting events. It's, Caitlin Clark obviously driving the WNBA. But you saw the other day MLB had their best attendance weekend in I think about 17 years. And you look, people are out there traveling. The TSA air travel data, if you check that, 7 of the 10 busiest air travel days in US history have been since May 23rd.
Yeah, so people are getting out there and they're spending money on that, even as maybe they're still squeezed at the grocery store. They're still feeling a little. I mean, what does all of this tell us about inflation and how reassured or not you are that we're going to continue to see it moderate?
Well, I think also those high-end consumers to keep in mind is a lot of them have owned their houses for a long time. They refinanced in 2020.
You're locked in at 3%. You're feeling good.
Exactly.
Yeah. I mean, I gotta say, anecdotally, if I may, we bought our house not even 4 years ago, but rates have changed a lot. Even if they haven't owned them for a really long time, rates have changed a lot in a short period of time.
Yeah, and your house payments may have gone up a little with property taxes and insurance obviously has gone up, but the reality is that owner equivalent rent, which is such an important part of CPI for those 2/3 of Americans who own their house, is more a theoretical thing. It's, your payments have not gone up nearly as much as inflation says housing costs have gone up. So you're out there spending. You're feeling pretty good about yourself. You're hitting the road, traveling, and you're kind of, I think Americans are still in that post-COVID almost euphoric reaction to, I was tired of sitting at home. I want to get out there and hit the road. And we're traveling internationally. I think we're up about 20% year on year, international travel. We're seeing it in domestic travel. We're seeing that. But I think, at the lower end, the consumers who rent, the consumers who were for a while getting the biggest raises, about 2015 to 2023, you were seeing the bottom 25% of Americans were getting the largest percent increase in wages. They are feeling some stress. We're seeing a little bit of cracks or maybe just some normalization there. We had very low defaults in 2020, 2021 amongst that population of consumers. I think we're seeing a little more stress there than we were.
Ian, how do you, it's interesting because we're talking about the consumer and they're hitting Taylor Swift shows. They're hopping, they're going with the kids, hopping on the plane to Disneyland. But then we also have, Ian, all these polls, all these surveys, which show people when you ask them about the economy, they don't feel so good. How do we square that?
I think, we saw confidence come out today. You were mentioning that. Part of it, I think, is our confidence has become so political. If you look at, what party is in the White House almost determines how you feel about the economy. If you're, a Republican, you feel bad. You're a Democrat, you feel good. If the parties switch, you're going to see that flip the other way. And I think there is this. It's funny how much of a disconnect I feel like we're seeing. Consumers say they're going to spend less on restaurants, but we look at the card spend data from something like Fiserv last month. It's up. Restaurant spending's up. So there's a very much do as I say, not as I do, or look at what I do, not as what I say.
Yeah, most definitely. So in addition to consumer, you also deal with a lot of companies, right? And you deal with lending to companies in construction and other, across the spectrum here. So how are they feeling? What are they doing?
I think, I don't think they're quite as, at the beginning of this year, when I talked to manufacturers across, especially we have a lot of manufacturers in the Midwest, and we're expanding into the Southeast. When I talked to them, they were a little more bearish at the beginning of this year. They saw some softness in their demand. I think now they're probably, as the economic picture's gotten a little worse from a data perspective, from a Wall Street perspective. Maybe they haven't gotten as negative. I think they've sort of stayed medium, while we've had some highs and lows. Those of us who study the data so intently, they're more looking at their sales data, their inventory data. They're seeing some okay stability, okay demand, but it also depends on the segment you're in. I was talking to an electrical contractor in the Midwest, and they were saying because of data centers, and this is an electrical contractor with large scale revenues, this is not mom and pop. And they were saying 50% growth in revenue they expected this year because of data centers. So we're seeing in Columbus, we have the huge Intel plant. Down in the Southeast, we have the battery plants. We have the new auto plants going in Columbus, in Columbia, South Carolina, not Columbus, Ohio. Savannah, Toyota going into North Carolina. There's a lot of really large infrastructure happening. There's a lot of manufacturing plants being built. And so what I thought was going to be a weakness, which was construction, as we saw a pullback on just sort of the standard distribution warehouses have gone a little ahead of themselves in terms of supply, pullback in multifamily, has not been. And they're still saying, it's a tough labor market out there for that kind of space. If you're looking for electricians, you're looking for machinists, tool and die makers, those are tough. You want to staff a gas station, that's gotten easy, I think. And so I've heard really a mixed picture on the labor market from our clients.
And that's still some good advice for perhaps new high school grads who are looking to go into a trade, trying to figure out where to locate geographically, I guess.
I think, if you go into the trade school world, I think there's a lot out there. There's a lot of jobs out there looking for work, looking for skilled labor. I would say, skilled is the important part of that always. Right. But you've always looked, I started my career at BLS, used to study this data, talk to kids, and tell them, look, there's a decent cohort of high school grads who do pretty well, but normally they've gotten some other education, but it's just not the traditional college path.
Right, exactly. Ian, thank you so much.
Well,
Really
thank you.
appreciate it.
Appreciate
Interesting
you having me.
perspective.